Jobs data manipulation exposed. 1 million fake jobs as Shanghai premium doubles to $6. Nobody's talking about this. Jobs data hit. Gold and silver got smashed. Markets celebrated. Except the revision data shows they overstated employment by over 1 million jobs, and the Shanghai premium just doubled to $6. If you're new here and your first instinct is, this sounds like conspiracy, good. That's exactly the reflex they programmed into you. The establishment profits when you dismiss without verifying. They win when skepticism only flows one direction, toward alternative sources, never toward them. This channel operates outside their control, which is precisely why the algorithm buries it, and why you probably found this by accident, not recommendation. I don't need your trust. I need you to verify what I'm showing. Check the settlement documents, read the COMEX reports, pull the COT data yourself. The ones who actually do that, they realize it's not conspiracy. When you can cite case numbers, fine amounts, and admissions of guilt in federal court, they stay. The price divergence nobody's addressing. Current prices as I'm recording. Silver Western Spot, $84. Silver Futures, $83. Shanghai Spot, $90. Shanghai Futures, $93. That's a $6 premium. Last video, it was $3.77. It's doubled. Check Shanghai Futures Exchange data yourself. It's public. What happened with the jobs data? Here's what happened. Jobs headline beat expectations. Gold and silver dropped. Standard smash. But the revision shows prior numbers were massively revised down by over 1 million jobs. 862,000 to be exact. The biggest downward revision since the 2009 financial crisis. Total 2025 job growth? Cut to 181,000 for the entire year. That's 15,000 per month average. 2024 added 1,459,000 jobs. This isn't a slowdown, this is collapse, disguised by headline manipulation. Quietly revised months later when nobody's watching. The pattern of systematic deception. 3 straight years, same pattern. 2023, revised lower. 2024, revised lower. 2025, revised even more lower. Employment overstated by over 1 million jobs at one point versus actual payroll records. Gold and silver were smashed on the fake headline, but they've now retraced nearly all losses. Gold is confirming a breakout over $5,100 as I'm recording. The suppression didn't hold because the fundamentals underneath are completely disconnected from paper manipulation. February deliveries, the smoking gun. February silver deliveries at COMEX just hit 23 million ounces. That's 45,592 contracts. This is now well over the total open interest that existed in the February contract at the end of January. Over 100% of open interest issued delivery notices. When deliveries exceed the entire open interest at contract start, that's physical, overwhelming paper positioning. Check COMEX delivery reports. They're dated, verifiable, public. The March contract setup. Current March open interest, 68,366 contracts. That's 342 million ounces of paper claims. February 27th is first notice day for March delivery. 2 weeks. That's when traders must declare physical silver or cash settlement. If delivery rates stay anywhere near February levels, with 342 million ounces of claims, COMEX faces the biggest physical test in modern history. The Chinese New Year manipulation window. Here's the timing signal most people missed. Shanghai Metals Exchange closes Sunday, February 15th through Monday, February 23rd for Chinese New Year. 8 days where the Eastern physical market, currently setting record premiums, goes dark. Historically, expect heavy manipulation in fraudulent paper markets during this window. Western banks know the Shanghai bid disappears temporarily. They'll use it to push prices down without Eastern physical buyers absorbing the pressure. But here's what's different this time. China's backwardation signal. China's silver market is in record backwardation even before the holiday starts. The front-month contract on the Shanghai Futures Exchange has climbed to a record premium over the next active month. Such large backwardation is driven by an inventory crisis and depletion of deliverable material. Investment bar demand and solar manufacturing are draining stockpiles. Short sellers are paying deferral fees just to avoid delivery. That's not normal market behavior. That's shortage, plain and simple. The tightening in China coincides with broader hemispheric realignment of silver concentrate flows toward U.S. refining channels. Geopolitical supply restructuring is amplifying physical stress in Asian markets, while Western paper markets pretend everything's fine. Connecting the employment data to the real economy. Connect the employment manipulation to the real economy, because these dots don't get connected in mainstream coverage. 9 large U.S. companies filed bankruptcy last week. The 3-week rolling average is over 6 bankruptcies per week. Large corporate bankruptcies are at the highest levels since COVID. Consumer debt defaults are at the highest since 2017. Total delinquency rate, 4.8% of all outstanding U.S. household debt. Q4 2025 was the highest in 8 years. Let me connect this. Employment overstated by over 1 million jobs. Corporate bankruptcies at COVID levels. Consumer defaults at 8-year highs. Yet the entire commodity complex is breaking out. Silver up 150% in the past year, gold up 76%, dollar down 10%. That's not recovery, that's currency debasement meeting supply constraints while the real economy collapses underneath nominal price increases. The market chaos today. Equity markets saw insane volatility today. S&P 500 down 0.3%, NASDAQ down 0.35%, Russell 2000 down 1.25% after rallying on the jobs headline. Crypto erased nearly $90 billion. Bitcoin below $66,000. Ethereum touched $1,900. Markets don't whipsaw like this when underlying data supports the narrative. This is positioning chaos while fundamentals deteriorate. The bond market isn't buying it. 10-year Treasury yields barely moved. December 2025, 4.175%. January, 4.173%. February, 4.177%. Flat bond markets are not buying the strong economy story when yields refuse to move despite supposedly robust employment. They're pricing what the revised data shows: economic weakness forcing Fed accommodation eventually. The technical signal most people missed. Here's the technical signal most people missed. Silver dropped to $82 and briefly fell below the 150 exponential moving average on the hourly chart. If you've been here a while, you know this 150 EMA has acted as solid support for weeks. When it broke lower earlier in this move, we saw price collapse hard from around $90 all the way down to the $63.90 overnight low. But today, after some days of chop, price has reclaimed that level. It's now back above the 150 EMA on the hourly. That's a structural shift. What was overhead resistance is now underneath as potential support. Does this mean silver is going to the moon? No. Does it mean price rockets higher from here? Absolutely not. Support needs confirmation. The price has to hold above it on retests. Volume needs to back it. Momentum needs to build. But this is another piece of confluence. The technicals are starting to align with the fundamentals. We're seeing the $6 Shanghai premium, record backwardation, delivery pressure building into March 1st notice day. For paper traders especially, confluences like this matter. You want multiple factors lining up before taking a position. This is not a buy signal. This is not what we do here. I don't give trading advice. I don't tell you what to do with your money. I just share the raw data, verifiable, public, straight from the exchanges. And I encourage you to use your own brain. Do your own verification and make your own decisions. The ones who do that homework see the bigger picture. The ones waiting for someone else to spoon feed them, they'll stay confused. The CME rare earths development. CME is considering rare earth futures contracts. When exchanges create futures for materials critical to defense, technology, energy, and infrastructure, that's institutional acknowledgement that strategic supply chains matter. It also sets up the same paper manipulation that's plagued precious metals spreading to rare earths: physical shortage, paper abundance, suppression until the divergence breaks. The bearish case matters. The bearish case matters. Let me lay it out. Jobs data was massively revised for the full year, but still showed January at 130,000 jobs. Unemployment at 4.3%, not recession-level weakness. Current month headline? Markets can rally on headline strength for extended periods before revisions matter to price action. Silver volatility is extreme. Moves in both directions shake position traders before the actual supply crunch forces delivery failure. March 1st notice day is still 2 weeks away. Contracts can roll positions or close. Cash settlement can be enforced. The system has more tools than most realize for avoiding delivery failures, even when physical tightness is real. Shanghai closes for Chinese New Year, creating a manipulation window without Eastern buyers absorbing paper selling. Western banks can push lower temporarily. The 150 EMA support could break. Technicals could deteriorate. Price could retest lower before delivery pressure materializes. Corporate bankruptcies are at 6-week elevated levels, but not 2008 crisis yet. Consumer defaults at 4.8% are an 8-year high, but not catastrophic. The economy could muddle through stagflation without triggering a crisis forcing immediate monetary response. This is financial warfare education, not advice. This is financial warfare education, not advice. Paper manipulation has persisted for decades despite recurring physical tightness. But here's the counter. Every bearish delay assumes paper maintains price discovery control. That assumption is fracturing. The Shanghai premium is $6. That's not minor arbitrage. Eastern markets are paying massive premiums for physical delivery, while the West manipulates paper lower. When physical and paper diverge to that degree, paper pricing loses credibility. The delivery math that matters. February deliveries already exceeded 100% of open interest. March sits at 342 million ounces. First notice day is approaching, February 27th. If delivery intentions follow anywhere near February patterns, COMEX faces the largest physical test in modern history. The system can suppress paper, but it cannot print physical metal when buyers demand delivery instead of accepting cash settlement. Here's what matters now. February 27th. First notice day for March COMEX silver. 342 million ounces of open interest against limited registered inventory. Shanghai premium at $6, signaling physical disconnection from paper pricing. Chinese New Year closure, February 15th through 23rd, creating a manipulation window. Employment revised down over 1 million jobs, systematic overstatement. Corporate bankruptcies at COVID highs. Consumer defaults at 8-year highs. Commodities breaking out despite economic deterioration. Technical structure shifted, 150 EMA as potential support. Fundamental structure coiled, delivery pressure building. Geopolitical structure shows, East accumulating physical at premium while West manipulates paper lower. What to watch? Watch what happens during the Chinese New Year closure. Watch delivery intentions leading up to February 27th. Watch whether the 150 EMA holds or breaks. Watch the Shanghai premium when markets reopen after the holiday. Verify independently. Verify the employment revision data, BLS benchmark reports. Check COMEX delivery statistics, updated daily. Public. Look at Shanghai backwardation data on the futures exchange. Verify bankruptcy filings. Check consumer debt statistics. Don't trust the jobs headline. Don't trust my analysis. Trust primary source data. Verify independently. The ones who do that homework see what's building. They understand why delivery ratios matter. They know what persistent premiums mean when they won't close. They recognize the pattern when employment gets revised lower 3 years running by over 1 million jobs total. The ones waiting for comfortable mainstream explanations? They're not my concern. I'm not here to convince anyone or predict what you should do with your capital. I'm here to show you the data they're not connecting. What you do with that information is entirely on you. The warning isn't a buy signal. The warning is verify or stay blind. Your choice. Invest with logic, not hype. OG out and about.